Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. If you have questions or topics that you wish to discuss, please chat those over now so that we can be sure to get to them all. We'll start out with the ones that have already been chatted up. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So today's topic is Schwab contribution block. Will Schwab block employee contributions after December 31st? Here's the fix. So there are those in our community, advisors, solo 401k account holders who have had accounts at Schwab and that have reported that Schwab's basic solo 401k plan does not support employee contributions being made after the end of the year. So for the prior year, retroactive contributions, even though that's certainly allowed under the solo 401k contribution rules, that as long as the plan is established by the end of the year, you can make all types of contributions, including employee, employer, and voluntary after-tax contributions by the business tax return deadline, including any timely filed extension. So the fix is to use a solo 401k plan through a third party, such as my solo 401k Financial, but then have your accounts at Schwab. And we're very hands-on in helping our customers open up accounts at Schwab, whether it's institutional accounts for those that are working with advisors or retail accounts for those that are not working with advisors. So we want to talk about that topic today. So before we turn to that good topic, though, let's again turn to the first question that was chatted up from Lena. I've over contributed to my pre-tax solo 401k bucket by $7,500, total 3,000, or excuse me, 38,500 for the employee deferral for age 54. So after talking to you guys, I moved the extra 7,500 to the after-tax, then Roth as mega backdoor Roth. I've already done a 1099-R request form previously. Should I do a second 1099-R request form for this new transfer of $7,500? Yes, you should, if this amount was not covered by the prior form submission. In that case, we will aggregate both submissions, add them up to report on one 1099-R for all the after-tax to Roth transfers that occurred in 2025. Hopefully that makes sense. Okay, so now let's turn to the slides that we want to share. Again, this is your Solo 401k webinar and Q&A session with my Solo 401k Financial. So this is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Our goal is to help you stop overpaying taxes and start building real retirement wealth. So again, today's topic is we are hearing from advisors, from solo 401k account holders who have had basic solo 401k plans that were set up at Schwab, where Schwab is telling them that employee contributions have to be made by December 31st, even though the rules, the solo 401k rules don't require that. Under the solo 401k rules, as long as the plan is established by the end of the year, you can make all types of contributions by the business tax return deadline, including any timely filed extension. So the fix is to work with a third-party provider like my solo 401k Financial to obtain your plan documents from the third party, but then open up accounts at Schwab. So Schwab will open up accounts for those that bring their own plan documents, and then that would allow you to then take advantage of those contribution rules for self-employed individuals where you can make contributions for the prior year. So again, some are reporting that Schwab's system restricts or incorrectly codes employer salary deferrals made after December 31st. So the conflict is with the actual contribution deadline for those who set up their plan by the end of the year. You have until your business tax return deadline, including any timely filed extension, to open accounts and make contributions for the prior year, including employee, employer, and voluntary after tax. So, but for those that have that vanilla plan at Schwab, whether it's on the institutional platform or the retail platform, those prior year deposits may appear as current year, creating a tax mix match. So, in the possible explanation here, and again, this is just where we're just sharing the information that's being provided with us, and we do note that there is an FAQ on Schwab's website, which would at least be consistent with that, where they're saying that um, or I should say, for incorporated businesses like an S corp, the contribution has to be made by the end of the year. And the possible explanation here, again, just a theory, um, is that Schwab's solo 401k system is mirroring the Schwab system for large corporate 401k plans. So when they built perhaps their individual 401k system, they made a piggyback off the 401k system for large corporate 401k plans, so full-time employer plans where there are employees who are participating in the 401k, so non-owner employees. So the corporate W-2 rules are different, where employee deferrals must be made by the end of the year, whereas for self-employed individuals, you have more time. And this is confirmed by IRS Publication 560, which is the landmark guidance for self-employed retirement plans such as solo 401ks, where it's clear, there's a chart on page 3 of that IRS Publication 560, that as long as the plan is established by the end of the year, you can make all types of contributions, including employee, employer, even voluntary after tax by the business tax return deadline, including any timely filed extension. And from a policy perspective, that makes sense because one's ability to make contributions is based off of their earned self-employment income. And many solopreneurs, many self-employed individuals, they may be working all the way through the end of the year and they don't know exactly how much they made until after the end of the year. So it makes sense that you would have more time to determine how much you can contribute, and then determine how much you want to contribute, and then have more time to ultimately deposit those contributions. So the possible result here, if you're using that vanilla plan at Schwab, is that they may enforce a W-2 deadline that is not really designed for solopreneurs and not applicable to solopreneurs. So the My Solo 401k solution, the workaround, is to obtain the plan document from a third party, like My Solo 401k. Whether you're opening a new Solo 401k plan with My Solo 401k Financial, or you're upgrading an existing plan to our plan. And then using our documents, Schwab will open up brokerage accounts for third-party plans, what they call CRA accounts or company retirement accounts. So then you can have the best of both worlds for those that want to still have their accounts at Schwab. So you can keep the accounts at Schwab for trading, for investing your solo 401k funds, but have that account governed by a third-party plan. So then you can take advantage of all the features that applies to a solo 401k, including the ability to make those contributions, including employee contributions, by the business tax return deadline, including any timely filed extension. So how the company retirement account works? Well, again, it's a brokerage account that's opened up at Schwab for a third-party plan. So Schwab is just providing the account. They're the custodian of those brokerage assets, and they're not policing the account. They're not imposing contribution timing blocks. So as a result, you deposit the funds, you determine the tax year and the type. And as long as you establish the plan by the end of the year, so you sign up with My Solo 401k Financial by the end of the year, that'll establish the plan by the end of the year. Then you can take your time to open up accounts, to make contributions by your business tax return deadline, including any timely filed extension. So taking a step back, who's eligible for a solo 401k? Well, it's an owner-only plan. So it's designed for those who are self-employed. So they report earned self-employment income on their taxes, could be on Schedule C if their business is taxed as a sole proprietorship, or a single member LLC that's taxed as a disregarded entity with the income reported on their 1040. W-2 wages if your business is taxed as an S Corp or a C Corp, or income reported on line 14 of the K-1 that they receive in the event that the self-employed business is taxed as a partnership and files a 1065. The other part of the self-employment or I should say the solo 401k eligibility criteria is that in addition to being self-employed, you cannot have any non-owner, non-spouse, full-time W-2 employees. So your spouse can participate if your spouse is working in the business and reporting their own earned self-employment income, but you cannot have any non-owner, non-spouse, full-time W-2 employees. Now, the other thing that's noteworthy is that you can also have a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer sponsored plan, as long as you've got that separate self-employment activity with no non-owner, non-spouse employees that are working on a full-time basis for any business owned by you or a spouse, if any. The critical deadline is December 31st. So per IRS publication 560, again, the landmark guidance for self-employed retirement plans like solo 401ks, as long as the plan is established by the end of the year, that'll keep all your solo 401k options. Now you have the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by the business tax return deadline, including any timely filed extension. So establish the plan is the requirement for the end of the year. So it's helpful to understand that a 401k is a legal entity. So when we talk about establishing the plan, that means establishing a legal entity. The way that you establish a legal entity is through the documents. So that means that you just need to focus on the paperwork first. You don't need to open up the accounts. You don't need to obtain a separate EIN number for the 401k. You don't need to fund the accounts by the end of the year. All of those steps can occur next year when you're ready to open up the accounts and make the contributions. So we make it easy at my solo 401k financial to meet the deadline because we've established a plan within the same business day when someone signs up. So we will generate those IRS approved plan documents within the same business day. Once you submit the quick 1-minute application and payment is made, then you can take your time to open up the accounts, determine how much you want to contribute, and fund those accounts by your business tax return deadline, including any timely filed extension in 2026. And so the key here to work around potential block at Schwab is to obtain the plan documents from my solo 401k financial, but then open up the accounts at Schwab, right? So you separate the plan provider and the account provider. So in that case, Schwab is just providing the accounts. They're not policing the accounts. And what you can do with those accounts is going to be governed by your third party plan document, which if it's provided by my solo 401k financial is going to be fully featured, right? It's going to allow for those retroactive contributions. It's going to allow for mega backdoor Roth contributions. It'll allow for solo 401k loans. It'll support the $1,500 in tax credits that our solo 401k clients are eligible to claim when they set up a solo 401k plan with us, along with the compliance support, like the 5500 EZ and the 1099R, if it's needed for those clients or their advisors who simply just request it from us in a timely fashion, since we don't have access to the accounts. All right, that takes us to the end of the slides that we wanted to share. Thank you so much. I see we got another question. We'll turn to that question just in a moment. Just quickly, if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform, whether you're on LinkedIn, YouTube, X, Instagram, that the content is valuable, which will help other solopreneurs like you, other advisors like you find it. Subscribing guarantees that you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. All right, next question here is from Nick. Financial advisor here. One of my clients came over with a solo 401k plan set up by the prior advisor. His business is jointly owned with another individual, 50-50. It files as an S corporation. Both owners have spouses that work in the business, but there are no other employees. All 4 individuals, owners plus the spouses, have owner-only 401k accounts. From my research online, it appears that the IRS code allows for this setup, assuming there are no non-owner employees aside from spouses. I do agree. Yes. So it would really be one plan. So a solo 401k is the marketing or the industry terminology. If you look at the code, it's referred to as a one participant plan. And so one participant plans are a lot of the rules that apply to full-time employer plans don't apply to one participant plans. So they can be offered in a much more streamlined, much more efficient, you can have advanced features, etc. way. Now, there are exceptions to that one participant requirement. One would be for spouses that are working in the business and want to participate in the solo 401k. Another exception would be for other owners of the company, of the self-employed business that are working in the business. In other words, they're reporting their own earned self-employment income. So as long, for example, as each person here in this case receives a W-2 that would demonstrate that they're working in the business. And so as long as each owner is a 3% or more owner, which obviously that is the case here, then each person could participate in the plan. So it would still be considered a quote one participant plan, meaning a solo 401k, but each person can participate. Each person can have their own separate accounts. Each person can contribute based on their situation, their objectives, etc. Again, it's still considered a solo 401k. Does my solo 401k have the ability to set up a solo 401k plan for both business owners and spouses? We do. So that would be again one plan. So for example, for 5500 EZ purposes, you would need to aggregate all sources, or I should say all accounts. You have to aggregate the value of all those accounts to determine whether the $250,000 threshold has been met, and therefore a 5500 EZ needs to be filed. Great questions. Thank you so much, Nick. We've got a little bit more time if you want to chat over more questions. We want to take a moment to invite you to our community. We have the largest community of solopreneurs, just those that are interested in the solo 401k topic, could be advisors, etc. We have over 30,000 members, and it's totally free to join. All are welcome. You don't need to be a client. You can join quickly and easily at mysolo401k.net/my community. So please take a moment and join. Again, all are welcome. It's free to join. It's very easy to join. You can join just in a minute. So please don't hesitate to do that. All right. Well, looks like that's it for today's solo 401k session. And I see that we got another question come in from Nick. Great. Thanks for bringing it. Is that setup process to establish the plan the same as for an individual business owner and spouse plan? Any differences that differ in the setup? So I would go ahead and just, yes, it's the same application. Now, when you submit the information, I would put slash. Uh, so if it's John Smith and Jane Smith, and then it's John Jones and Jane Jones, right? 4 different people. I would put two persons' name because the application really contemplates 2 people. I would put the names of 2 people in the first field, just put like a slash or something after it. And then when the questionnaire asks about do you have any spouses, I would put 2 spouses' names, the other spouses, the corresponding spouses' names in the spouse field, like when you're answering that question. And then when you get to the last question, it's going to ask whether it's going to ask for the name of the plan. Now, if a 5500 EZ has been filed for this plan, some folks would keep the same name. You could still change the name even if a 5500 EZ has been filed, um, but it's up to you. If you want to change the name, a good naming convention is 2 words in the word trust for a total of 3 words. And then in that final field where you're providing the name of the plan so that you are copied on the communications as the advisor, you can add, please copy then your name and email address, and then we'll link that plan to you and copy you on communications. Let me grab that link to the application. Thanks for the good questions. Chat over more questions now, please, so we get a chance to go through them. All right, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.